Hi everyone, it's Mish Schneider, Chief Strategist at MarketGauge.com with you again. Hopefully you enjoyed the video that I did for you on the 20th. And one of the things we talked about was the dollar-yen relationship, and we're going to recover that, as well as going over the SPY and gold and natural gas and oil, of course, and also soybeans. I'd like to follow up on that too. By the time I finish this video with you, we will know the NVIDIA earnings. And so we will see whether or not that's going to be any kind of game changer at this point. So let's start with this, because this should probably not be terribly impacted by what happens with NVIDIA. And of course, this is starting with the dollar-yen relationship. And when I talked to you all yesterday, I said that probably not going to see this below 147. Well, that certainly was the case. This came in lower at 147.15 and then turned around. And this candle here, this is called a doji day. So that is when you have the opening and the closing prices at the same level. Generally what that means in Japanese candlesticks is uncertainty, a pause in the action. And so after a bounce, which was expected as this went into support, now I think we have an indecision. So let's see if we can kind of determine how the decision may be affected one way or another. Well, we talked yesterday about the fact that we would have resistance now up at around 149 really, and that it wasn't until we got to the 50-day moving average at 149.50 level that things would get interesting. And at this point, with the momentum down here showing a decline, although leveled off a little bit and oversold, we have to assume that the trend has been broken, which is a good thing for the yen. What would change my mind as a more bullish bias, of course, would be if we got back through this 149.50 level in the dollar yen. And of course, if this continues to go down and we see this more as the doji relationship indecision as a continuation of the down move, then I would go back to the fact that this would have to break 147, in which case I think your next real support comes in around 146.20. So let's move on. And I also said that $2,000 an ounce was going to be the key area to break. So now we'll see where the rubber hits the road. And that will mean whether or not we hold this 2,000 level and then eventually work our way back up to 2020. Now, let's take a look at some of the near-term levels. Clearly, 1980 becomes the key support. Bias bullish above. Bias somewhat negative, not negative, but at least more negative below. And in terms of even a closer support level to that, I like to look, as you know, with the opening closings on these sticks here. And there's a lot of congestion you can see on these opening closings up here. So that would be like 1995, so just underneath 2000. So it can break 2000, it can hold 1994 and still go up. So call that your first real pivotal support level. And then of course it does need to clear some stuff here. I would say your first big area before the 2020 would be the 2010, gets through 2010. Of course, then we're going to be looking at these highs here that we had earlier in the year, which was in October, not that much earlier in the year, but just about a month ago. And then of course we get through there, and the point is that this is a risk-off asset, and it was outperforming the SPY. Now it's back to slightly underperforming the SPY. So this is a relationship that we have to watch very carefully. If gold continues to go up, as we saw the miners go up today and silver go up today, it may be risk-off for equities, but it's certainly, hello, commodities. And I just wanted to show you very quickly on that same vein, these are our big view risk gauges at MarketGauge on our website. And so there are relationships that we like to watch. They're basically risk on, except for a couple. One would be that the junk bonds are underperforming the long bonds. That's not a good risk on situation. You want bond traders to have an appetite for high yield, high risk. That's not happening right now. There's been more of a flight back to safety with TLTs, which of course is that double-edged sword between, yeah, a sigh of relief on interest rates, but also potentially a recessionary tail. And then if you look at the SPY versus the TLT, it's sitting there kind of at par par. But I wanted to bring your eyes to this one. This is the SPY versus gold. So, you know, the SPY has been outperforming, and then we had that brief stint here in September. Then it went back to outperforming, and then you had that much deeper correction in SPY as the gold started to outperform, until we got to that point in late October, where of course SPY has had this tremendous rally since. So this is another area to keep your eye on, of course. So moving on to WTI crude, I mean, one of the other things I just love about commodities is that, yes, of course, there's an impact with Fed policy. They had their minutes today. So here in the oil, we talked yesterday about the fact that it absolutely had to hold the 200-day moving average. So far today it has. And what we have developing, and this is really not much of a surprise, is an inside day to the action of yesterday, which means that today's price action is inside the bar of yesterday's price action. Another indication, like a doji, of indecision. Now, part of this could be legitimate indecision. Part of this could be the fact that we are getting ready to have a long weekend in the U.S. Friday's open, but it's a half a day and a lot of people are traveling. So that means what? That means now we're going to take a look at this outside day range as a little bit more important, in that if this takes out 78.46, which was the high of Monday, that would be more upside. And of course, if we take down the lows at 75.41, that would not only break the 200, but that would mean more downside. And of course, then we start looking at areas that we could go to, which would be like 74.70 would probably be my first place. I've heard people say that this is in a downtrend, and so this is just a pop. But I'm not necessarily so sure about, because we have a lot of fundamentals coming up, particularly OPEC Plus is probably one of the biggest ones, but not the only big one. So for the 22nd, as you come in, I would say today's low and the low of this day right here, so let's call it 76.92, so 76.90 to 77. Pivotal point. Holds, bias up, breaks, bias down. And then, of course, we go back to be looking at that 200-day moving average. And, of course, on the flip side is if the bias is up over the 76.90, 77, if we get through that area I was just telling you about, which was the high of yesterday, 78.46, then the next area we'd be looking at, of course, would be about 79. That's the low from this day. And then we get through that. 80 is going to be, as it was before, still the very, very big number. I think we get through 80, people who are bearish oil will start to realize that they're wrong. Well, here's an example where the bears are definitely not wrong. And this is in natural gas. There seems to be nothing that can move this market right now. We even had lower inventories, but it didn't do anything. So here you go. So again, I think I mentioned 3 yesterday. I don't know if I'd get really excited unless this got back over 3, and that would give you about a 16-cent risk to underneath today's low to see if it's got anything at all to get back up to 320, or even better, where I would start to get interested would be if it can get back over the 50, and then way more interested if this can get it back over the 200. And I'm not so sure there's much else to say about this. For this contract, this is on new lows. If we try to find some past performance here, we have to go all the way back here. Look at where this was. This was in 2021, May 17, 2021. The low, I think, was right here, and that low was 276. So we traded 284. So maybe we need to go back to that 2021 low of 276. And then if we hold that, we could look at a yearly chart and potentially say we've got this huge yearly double bottom. But that's just me having fun. That certainly hasn't happened yet. So that takes us to soybeans. And yeah, I mean, I definitely have been getting more bullish as I'm looking at the soybean chart. So let's see, we talked about the fact that this retraced beautifully down to 1326, 1327, that we would consider this level up here at around 1350 to be the first area of support, better support, somewhere around here at 1360, and then of course the high yesterday, which was at 1368. We cleared that, and today we closed at 1377. So now what's next? I think we can keep our minds on that 1360 level as somewhat pivotal, as in bias bullish above, maybe slightly negative below. But when I say negative, again, it's being more corrective than negative. And then, of course, we'll go back to looking at 1340 and then 1320. If we hold above that 1360 level, then I would say that we're very close now getting into some of the resistance that we had back here when we were in September. And this day, even though we cleared it, we did not close above it. So I would be looking at some kind of close now above 1390. We get that close above 1390, it'll be the highest close that we've had since back here, which was in August. And it would also mean most likely that 1400 is on tap, and then of course we can start looking at 1400, 1420. But more importantly, really, will this go the route of OJ and start getting parabolic? We don't know, but there's certainly the possibility is there. Okay, we're still waiting for the NVIDIA results, so I will bring you SPY and NVIDIA in a moment.
Could go anywhere, but
okay, so here's the numbers on NVIDIA. So far we got a beat, 402 beating expectations on EPS at 339, revenue 18.1 billion, beating expectations of 16.1 billion. So you would think, of course, that this would be a bullish thing for NVIDIA, but instead, as I'm talking to you, the stock is actually dropping. Not a lot, but it's dropping. So let's take a look at a chart that actually is showing the quotes in real time. So this is actually my TradeStation chart. This is really basically my trading chart that I use. And you can see some of the familiar things on here. This is a 6-month calendar range high, which we talked about yesterday. NVIDIA cleared the 6-month calendar range low that NVIDIA held. Here is our real motion indicator showing the negative divergence in momentum. And here's your volume. And here's exactly what's going on right now. So after this reported well, that we would see support anywhere from 480 to 490, and so far that's happening. So right now it's trading at around 495 to 497, and it's about a half an hour after the close. So remember, we said that the 6-month calendar range high would be an important level of support. There's your 480. We didn't even get down there post earnings. So it looks like 490 is probably going to be the better number to watch. And remember, we talked about inside days. Certainly, no surprise here. We had an inside day today in NVIDIA. After yesterday, it made new highs at 505.48. So really not much I can say to you about this other than keep your eye on 490, breaks 490, then we're going to look at 480, breaks that. I think that we can see somewhat of a bigger sell-off, maybe down back to around 450. And if we can get through that all-time high at 505, it's kind of hard to assess how much we would actually get out of that move. But if we kind of want to take some judge of just the sideways consolidation between 400 and 500, then we're looking at the potential of about $100 moves. So that gives us now an idea of what we can say when we talk about the SPY. This is the SPX, another doji inside day. Pause, 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 right? Which of course makes total sense. But again, just looking straight at numbers, what we were talking about yesterday was this gap was very healthy as long as it holds. So there's your 44.60 level. And then from a much shorter term perspective, we were looking at near-term support at that 4,500. Certainly we're seeing that now with a digestion day today after the bigger day yesterday. And that means with an inside day, you always look at the outside day. So if it takes out the 4,557, which was the high of yesterday, then we have that gap. Remember, we talked about that gap where the low is 4,567. So that gives you a pretty good move up, another $10 move up, which might take us into Black Friday or possibly next week. And of course, if that gets filled, then we're back looking at 4,600, which many analysts think that could be it for the rally. I tend to agree with that with so many other factors in play. Okay, so that's it for now. I hope this was helpful to you. You all have a great afternoon. Happy trading, and bye for now.